Welcome to the Lend Academy podcast, episode number 196. This is your host, Peter Renton, founder of Lend Academy and co-founder of the Lend It Fintech Conference. Today on the show, I'm delighted to welcome Chen. He is the CEO and founder of NerdWallet. Now, NerdWallet's become a bit of a juggernaut in recent years where they have massive amounts of information on anything to do with consumer finance. And they really are becoming one of the most trusted brands in consumer finance. So I wanted to get Tim on the show to talk about, the background to NerdWallet, what it does, how it works with many of the fintech players today, how the impact of fintechs had on consumers, and what else is needed to really help consumers make good financial choices. We also go into some depth about their model and about how they have the wall between editorial and any revenue kind of opportunities, and we talk about that in some depth as well. And he talks about his vision for the future of consumer finance. It was a fascinating interview. Hope you enjoy the show. Welcome to the podcast, Tim.
Thanks for having me.
Okay, so I'd like to get these things started by giving the listeners a little bit of background about yourself. So why don't you just share some of the things you did actually before you started NerdWallet?
Sure. My career is one of Wall Street to Main Street, really. So I started off life as an equity analyst on the sell side and then on the buy side at a hedge fund, investing in public companies. And I think this is a pretty unique background in the sense that it really gave me a view into the competing interests of, say, business profits versus consumer welfare. So, what I learned at the time was there's a lot of industries where consumers reign supreme and businesses compete purely based on price. But then there's also other industries where businesses have moats that allow them to really avoid competition and make big and sustainable profits over time. And so I spent most of my time actually trying to dissect and understand those situations. And we would tend to invest in businesses that were misunderstood in one direction or another and were therefore mispriced. And I see certain industries, at the time, I really noted certain industries that were really great businesses at the expense of consumer welfare. So things like education, healthcare, and financial services. And, in the back of my mind, the entrepreneur in me always had a ambition to make a difference in one of those areas. And so that's kind of where the seed was planted. So I was fired in 2008 from my job when the recession hit,
right?
Which was a complete shock at the time. But it was also incredibly liberating having, a year or 2 years to really focus on pursuing my dream at that point. And that's really where I got started. During that time, one door closed and another one opened. My sister randomly called me one day and asked me for help finding a credit card. And I said, sure, let me Google that for you. Right. And so I thought I'd get back to her with a response in 30 seconds, but I really found a bunch of marketing materials rather than analysis that I thought was helpful. And so I created a spreadsheet, and that spreadsheet turned into NerdWallet. It got forwarded around to a few friends, quickly realized that, this problem with shopping for credit cards really applied to all financial products in the sense that there's not a great source where you can easily compare all your different options. So that's really where NerdWallet started. Okay.
So then you started off, was it purely just when you launched, was it just a credit card comparison site? Was that how it launched, or what? Just tell us a little bit about those early days.
Sure. That's exactly right. It really was a spreadsheet that I transcribed into a web app where you could, kind of talk about 2 or 3 important, pertinent questions about yourself, and then we'd give you the short list of things that match your needs. In our consumer research, we started to find consumers didn't want all the information. They wanted to be understood, and they wanted the few options that mattered. So, in the example of credit cards, people are typically either trying to establish credit, lower their interest payments, or earn more rewards. So it's kind of important to know where they're starting from. And then we might ask a follow-on question and maybe another one after that.
Right, but you go onto the site today, and it's quite impressive actually the breadth of information you guys provide. So when did you start to move just beyond the credit cards, and you've now when did you decide that you were going to cover everything pretty much?
Right. Well, we really had to focus on credit cards for the first 3 years to find our footing. And then we really started expanding after that, but knew from the start that this was a big problem in all verticals. Today, we cover, 10 plus verticals, basically any popular consumer finance product.
Mm-hmm.
We try to give great analysis and help you shop it easily.
Right, right. So when you're describing your company today, I mean, how do you describe it? Because it's you sort of you are doing a lot of different things here. So tell us what you say.
Yeah, so we help consumers make smart money moves. And there's two big problems that consumers face today. The first is it's really hard to shop. Consumers leave about $55 billion a year on the table by not having the best financial products. And there's a lot of reasons for that, but we try to remove as much friction as possible from that process. And the other big challenge consumers face is that money is just so complicated that they don't even know when they should be making smart money moves. So for example, if you sign up for a great financial advisor or just have a friend who's really into this stuff, they might let you know, hey, tax time's coming, put money in an IRA, or gosh, you're probably overpaying for that mortgage or that auto insurance policy. So these things aren't things that you actually think to do. But when you start building a relationship with us, when you tell us more about yourself, we'll start proactively letting you know that it's time to think about these things in a just-in-time fashion.
Right, right. Okay. So then, there are other companies offering services like this. Like Credit Karma comes to mind. We had Ken Lin on the show last year, and there's also Bankrate does for a simple comparison shopping. So how do you differentiate yourself from the others in the space?
Yeah, so we like to think that we have next level consumer trust. We believe we're the most trusted brand out there when it comes to financial shopping and education. Over 100 million people a year come and get help from us every year. And I think the reason that we've achieved these things is because our entire ethos is centered around that first spreadsheet I was just mentioning. We don't market to our consumers. We give them useful information, and I think they can really feel that. And so we've maintained editorial independence over the years, and it's very apparent. So for example, I was in a meeting yesterday with a potential partner, and we let them know that our editorial team needs to vet them before we can consider adding their product to our site. We've turned down partnerships before when we don't feel like they, are either consumer friendly or are one of the better products in the category. And so, that's a big part of what we do. I'd also think about segments. There's different needs for different types of people. And one way I think about the American consumer is that about half of them are paycheck to paycheck, and the other half have financial choice, right? And these are two very different mindsets. I mean, we spend so much time doing consumer research and sitting in people's living rooms and trying to understand their needs. The paycheck to paycheck half really cares about, will I qualify? What's my credit limit? How can I get to that next paycheck? And the people with choice have a completely different set of concerns. They have too many choices. They have, 10 different financial apps. They're trying to figure out how to plan with this extra money. How much do I put away? How do I create a plan that'll get me to retirement? And so if you think about the behavior between these two different groups, they gravitate towards different financial solutions. And I would say that NerdWallet does span both groups, but a lot of the most complex decisions actually come when you have choice. And then that's really when you say, well, gosh, I know I can qualify for a lot of great mortgages. Where do I go? How do I actually find the best options out there? That's why you would proactively go to a site like NerdWallet at that point.
Mm-hmm, mm-hmm.
And you see a lot of fintech innovation also on the paycheck to paycheck side. You see things like, the solutions I find exciting are things like, get my paycheck early, micro investing, save the change, free credit score. Things like this are really helpful to try to make things a little bit better, but they answer different consumer needs.
Right, yeah, that's interesting because you've had this company now, for about 10 years, and you've seen, when you started, the word fintech didn't exist, and now it's pretty commonplace, and you've seen sort of the evolution of the products that you're recommending. I'm curious to see, where is the innovation happening that is most impactful? I mean, you mentioned a couple of them there, but when you're looking at sort of the different segments that you cover, and I see them on your website right here at the top of your homepage there. Where do you think in the broad categories that's most exciting as far as fintech innovation?
Yeah, so I think that segment framework is an important way to think about this. If you look at the 55 billion that Americans are wasting every year by not shopping for financial products, I think that really is more weighted towards consumers with choice. And the reason is because they're the ones that have substantial deposits earning 0% interest at a money center bank, right?
Mm-hmm.
They're the consumers that have, the largest loans and things like that they should probably think about optimizing the insurance policies, et cetera. And so innovation there is really means giving consumers, easier comparison, better choice, better rates. And then if you look at the paycheck to paycheck side, I also think the innovation there is very important as well. It's not as big from a dollar impact perspective, but it maybe means a lot more to those consumers.
Mm-hmm.
So I think things like early paycheck are great. You can get a couple hundred extra bucks instead of going through a payday lender. You can go through one of these great services that gives you your paycheck early. I do think that fintech is more of a band-aid in those situations than an ultimate solution, in the sense that fundamentally the consumer has a revenue issue and they have an expense issue. And this may give them an extra couple $100 of float, but it's not going to solve their core problems.
Right.
But it's a good attempt nonetheless.
Mm-hmm. Mm-hmm. Okay. So I want to sort of dig in a little bit here into your website. You have a massive amount of content. It's when I started sort of tooling around on this over the last couple of days, and it was really staggering to me how much you've written about all the different financial products and different categories. So I guess maybe the first question is around, I'd be curious. Is it, you give credit cards is on the top left of your site. Is that where you still get the most traffic and the most interest in the credit card category?
Yeah, so we're actually quite diversified now. Our biggest category in terms of traffic, I believe, is still credit cards, but it's less than 20% of our overall traffic.
Interesting.
People have pretty diverse financial needs, and the source of that complexity comes from our tax code, from the fact that there's over 10,000 bank credit unions out there with different products. Like, these things are really complicated. And so actually the more financial choice you have, the more complex your money management problem becomes. Mm-hmm. And yeah, that's a big part of why there's so much content. I mean, we don't write it just to write content. We're trying to cover all the areas that someone may care about.
Right. And you also have, I noticed many of your products, I would even say most, it seems like, have a NerdWallet rating. And you mentioned you have to get your people in there before you can take on a partner. But what goes into that NerdWallet rating?
Sure. So these ratings are different by vertical, and they're driven by our editorial team, which is completely independent from our business. And so, if you take the example of personal loans, some of the things that they care about include things like origination and late payment fees, impact on credit scores, transparency of loan terms, repayment options, customer support, and if the lender has faced government scrutiny from regulators in the past 5 years, we might factor that in as well. So there's kind of like a broad swath of factors that matter, and you would see a completely different set of factors on credit cards, for example. So we try to really tailor it to what consumers need, and the consumer insight here is really that consumers are overwhelmed with choice. They need that proxy for trust that can help them understand where the red flags are, where the pros and cons are, and so that can help them shortcut their decision. Mm-hmm. And that's what we provide.
Right. And so I'm looking at the personal loan category right now, and I've actually got it up with the debt consolidation loans, and you've got many of the companies that our listeners would know well, like SoFi, Lightstream, Marcus, Best Egg, Avant, Upstart, Prosper, etc. So I'm curious about a couple of things here. Is what does it take to get included in here? And because you don't have everybody, there's certainly some some companies that I thought you would have had that you didn't, and others that are a little bit of a surprise that you do have. So what does it take to get in a list in a particular category?
Yeah, I think it's driven by the editorial team. So, I know, for example, that they place extra scrutiny on 36% plus lenders and things of that nature. Not super in the weeds in terms of how they make all of these
Sure.
determinations, but
Mm-hmm.
it's really driven by some of those factors I discussed.
Right, right. And then I'm curious about sort of the business model then. I mean, are you obviously you can go and you can check your rate and you can stay on NerdWallet while you're putting in all this information. Is your revenue model purely based then on a successful application or a successful kind of conversion, shall we say, at these companies? Or just tell us a little bit about how it works.
Yeah, that's largely right. And in most cases, we're a matchmaker. And so we get paid when the customer either opens or funds an account, depending on the vertical. And yeah, I think that's a win-win for the consumer and the bank. Both people are getting either a great product or a great customer that really understands the product that they're about to originate. I mean, for example, we hear on the credit card side that because consumers understand the product they're getting into, these things are more likely to remain top of wallet for them and have a longer lifespan. So I'm really happy about the work we do there.
Okay, so then is it possible then do you have a revenue partnership with every single product that you endorse here, or are there some that you're doing that you recommend that you don't have a revenue partnership with? I mean, what you said, there's a wall between editorial and the business side, so I'm just curious about how that particular piece works.
Yeah, so we do have partners that we do recommend products that we do not have a partnership with. I think most partners or most financial institutions at this point that we think are great, we do have a commercial partnership with. But there are definitely exceptions.
And then obviously someone comes in and you said yourself that if you don't like the product, whoever it is, you're not going to put it on. And is there? I mean, I imagine there'd be some pressure. I mean, because you've got potentially, if you have a large customer that that you could send thousands and thousands of people to, how do you decide? Like the editorial comes in, and maybe I'm just curious to say, right, we're happy to forgo that $1 million in revenue that we're going to get this year because we don't feel like it's a good fit. I mean, how do those conversations go?
Right. Yeah. So there is a healthy internal tension there, and the only reason that I guess there's an interesting nuance here. The only reason we even have the optionality of doing this is because most of our customers come organically. We're not paying for these customers, and as a result, we have a lot of flexibility to be consumer friendly and consumer first in terms of how we make these recommendations. So there's definitely huge pockets where we are under monetizing, and it varies a lot by vertical. I would say that in an area like personal loans, we do tend to think that because there are so many partners that have great products, we will integrate with as many of them as possible to provide as much choice as possible. There are certain areas where the editorial team might feel strongly that we shouldn't be promoting certain types of products, and that may be either based on interest rates or terms or just like a history of issues that consumers have run into.
Right. I notice here you don't have payday loans, for example. I mean, you have bad credit loans, but they're still sub 36% on your site. So obviously that's a category that you've decided not to pursue, right?
Correct. Yes.
Okay. Interesting. So I want to go back to something you said earlier. I'm just curious. You said that there was this statistic you quoted. I think it was $55 billion that consumers are wasting on bad financial choices. How did you get that number, and what is that actually? Is that? I mean, where does that come from?
Yeah, so our editorial team did some analysis on that, and so just to give you an example, right? I think 19 billion of that comes from deposits that are in accounts that are not earning the highest yield you could get. And there's a big business around money center banks collecting deposits, and the rates are much lower than what you could get through an online high yield savings account. And so that alone counts for 19 billion a year.
Right. That makes sense, and it's amazing to me that people will still put money in their local bank that's paying 0.1% when you can get 20 or 30 times that elsewhere. Okay, so
Right.
then, like today, I'm interested in the fact there's so much more happening online today. So you've got a lot more. It's possible for you now to have there's online savings accounts, which I guess there were to some extent when you first launched, but certainly a lot more choice now. And as you see a lot of this move towards digital and move towards mobile, how is that impacting your offerings? Is it? I presume it makes it easier to have a lot more, to provide a lot more choice for consumers, but just curious to get your take on this sort of movement where all the major banks, and not only that, there's a lot more sort of digital banks coming to the fore. How is that impacting you guys?
Yeah, we think that the entrance of all these new fintech or digital banks is great for the consumer. It increases choice. They tend to be very digitally enabled banks, and that makes integrations with us extremely easy. And so we're seeing consumers really gravitate towards them. I think what you're looking at a couple of years down the road is this increasing convergence towards one place to manage your money. And that's really what NerdWallet is building. So imagine you log into this one place and there's increasing digital integration with all these banks and services. You can get the loans or deposits that are best for you when you need them. We'll proactively make recommendations when you should be thinking about things that you wouldn't even think about. Yeah, I think it's inevitable that we head in that direction. We're already racing there, and maybe a third of the way there.
Mm-hmm. Okay, yeah, that makes sense. So then you said earlier that you don't really pay for your customers to come to your site or pay for your visitors. I mean, is that purely because the vast majority are coming either from the search engines or from word of mouth? I mean, how are you? What do you do proactively to try and reach new users?
Yeah, so search engines and word of mouth are huge, and the flip side of that is just we invest almost everything we make back into building great products. We have a huge number of product engineering, design, user research, and content folks who are constantly trying to figure out how to improve on a product. And I think that really drives a lot of that word of mouth, as well as the other organic traffic channels. We are starting to pick up and do brand advertising, TV, out of home, and digital as well. But the thing that's making that a lot more efficient for us is the fact that consumers trust our brand so much, and that we're so pervasive in organic areas as well.
Mm-hmm. Mm-hmm. Right, that makes sense. So then, can you give us a sense of the scale you guys are at? I mean, how many people are registered on NerdWallet, or give us some sense of that?
Sure. Yeah. We serve over 100 million people a year. In terms of registered members, we're at a few million now. And yeah, both numbers are growing quickly. Our goal is really to become, the de facto destination for making smart money moves. And I think we're well on our way there. And this is really just within the United States, where we're, solely focused today.
So does that mean you're not looking internationally in the short to medium term?
Yeah, that's right. We think that there's a long way to go between the current state of, basically doing all of your money stuff in one place and where it's going to be in 3 to 5 years. And we think we can make a lot of that progress in the US. There's a lot of things to figure out still. I mean, there's a lot of marketplaces where the shopping experience still isn't where we think it'll go. Mortgages comes to mind. That's still very complicated and complex. And yeah, we think there's a lot of work to be done there.
Right. So just, yeah, I mean, on mortgages, it's still, I mean, obviously there's some of the newer fintech players that are coming in that are trying to make a difference there. And it's still, there's a lot of friction. So what you're saying is, I mean, I guess, how closely embedded are you with these companies that like they say mortgages or even personal loans or what have you, where you're really trying to work with them to improve the funnel and improve conversions and improve the user experience? Because it seems like I look at sort of some of these companies have really just refined the user experience down to a very, very limited amount of moves on the user's behalf. So how integrated are you into the needs of your partners there?
Yeah, we're working with the major players there. I'd characterize it really as being in the first or second inning. We've got a long way to go, but I think there's the will on both sides to continue to push those integrations. So I think it's just a matter of time.
Right. So then, are you looking sort of to replace like Mint as well, and you're looking? You said you want to be the one-stop shop where someone manages their entire financial life. So are you looking to really work on the expense side as well as the lending and investing side?
Yeah, that's exactly right. So I think about the different pieces of what you just described is, there's shopping. There has to be a marketplace for all the financial products out there so that the consumer really has choice, right? And then the other piece is not just choice, but convenience. So can we help consumers see all their stuff in one place, help them budget, help them move money around, pay bills, do what they need to do. So that all has to happen under one umbrella.
Right. And then, and what about, we haven't talked about mobile. I just want to touch on that really quickly. Are you primarily finding people coming to you on mobile now, or is it still kind of desktop web based, or how are people interacting with you?
Yeah, we crossed over into majority mobile maybe a few years ago, but desktop is still hugely important. I mean, we actually find that the time of day people are most engaged is, in the middle of the workday, during the work week. I think, that's sometimes when you think they go and check in on your money. Right. So yeah, desktop is definitely hugely important for us as well. Mm-hmm. It kind of varies by vertical. Things that you couldn't have imagined doing on your phone, 5-7 years ago are now majority mobile, like say credit cards, but there's still things like, mortgages that you really want to be sitting at a computer to do.
At least today, yes. Hopefully that won't be that way for much longer. But anyway, we're almost out of time. So you've talked a little bit about, you've painted a bit of a future where where things, where you've NerdWallet can sort of be the hub of someone's financial life. So I'm curious, let's just take a shorter term approach. Like, what are you doing over the next 12 months to try and what are you focusing on to really move the needle in that direction?
Yeah, so it's really some of the things I mentioned. It's really driven by choice and convenience, right? So we think we have a long way to go in terms of improving our marketplaces to make them really easy for consumers. And then on the convenience side, we're investing in our member experience, trying to figure out from a consumer perspective how to make it obvious when they should be making smart money moves, and then trying to take the friction out of making some of those smart money moves.
Mm-hmm. Okay, well, it's a fascinating space, and it really is. It's amazing how far we've come, but as you say, it's still in the first or second inning. So I think when in a few years down the track, we'll look at back today and think we were quite rudimentary. But anyway, I really appreciate you coming on the show today, Tim. Thanks a lot.
Okay, thanks for having me, Peter.
Okay, see ya. It really is interesting to me, this whole idea of this personal financial hub where we all go to manage our financial lives. Now banks are vying hard to maintain this sort of dominion over the consumer and have them be the financial hub. But then you've got others that are out there like SoFi in the fintech space, or Personal Capital, that are also trying to do this. And then you've got the sort of third party companies like NerdWallet or Credit Karma that are seeking to kind of become this hub. And it's going to be interesting. It's going to be great for the consumer. And I think there'll be more than one winner here, obviously. But there's going to be in the near future, you're going to be able to have companies like NerdWallet that will be able to not just be your personal financial hub, but proactively make sure that your finances are being managed optimally. And I think that's going to be great for the consumer. Anyway, on that note, I will sign off. I very much appreciate you listening. And before I go, just one more thing. I really would appreciate it if you would go to Apple Podcasts or Stitcher and give a short review to the Lend Academy podcast. It helps other people discover the show. So with that note, I will sign off. Thank you for listening, and I will catch you next time. Bye.